or whether we're seeing in the United States where the largest single delivery of silver ever in the history of the COMEX happened in May, or whether we're seeing China, which is the second largest producer of silver in the world, literally buying silver from all the miners directly in Peru, which disintermediates the marketplace. They're buying what's called doré and concentrate. Doré are the bars the miners make that are crudely refined, maybe 30 or 40%, before they send them to a refiner to be purified. And concentrate is a sludge, liquid sludge byproduct of that. They're buying all of that stuff in Peru, right from the miners, and then sending it back to China to be refined. They're paying double what the West will pay, but this accumulation is totally opaque. How much did they buy? What effect does it have on the price? On the supply, nobody knows. But this is coming from the second largest producer of silver in the world. Why are they doing this? Why has India bought over 900 million ounces in the last 5 years, more than the LBMA has in total they've bought in the last 5 years, and now Russia accumulating it for strategic purposes by the state.
In recent months, global silver accumulation has intensified. In May, the U.S. saw the largest silver delivery in COMEX history. Meanwhile, China, despite being the second largest silver producer, is aggressively buying silver directly from miners in Peru, paying twice as much as Western buyers. This accumulation is opaque, making it hard to gauge its actual impact on global supply or pricing. Similarly, India has bought over 900 million ounces in just 5 years, more than the entire LBMA holds. And now Russia is joining in, stockpiling silver for strategic reasons. Russia, the world's 8th largest silver producer, with an annual output of 38.5 million ounces, appears to be leveraging its domestic production as part of a broader strategy to reduce its dollar dependence following Western sanctions. Industry analysts suggest this move could drive silver prices up 50% within 24 months, particularly if other nations follow Russia's lead. Andy Schectman, a respected precious metals expert and CEO of Miles Franklin Precious Metals, explains that silver is currently trading above $36, having recently touched $37, marking just the third time in history it has reached this level. If silver closes above $35 or $36 in June, it would be a significant technical breakout, likely triggering interest from hedge funds. Industry analysts and precious metals experts are increasingly bullish on silver's prospects given the confluence of factors: central bank re-engagement, even if limited to Russia so far, chronic supply deficits, and surging industrial demand. David Morgan predicts silver will outperform gold significantly in the coming years, potentially reaching triple-digit prices. Dangerously low COMEX inventories and persistent short selling as unsustainable, foreshadowing a significant price spike. Silver has surged over 40% this year, while the US dollar has dropped about 9%, highlighting silver as a hedge against flawed fiscal and monetary policies. People aren't buying silver to get rich, they're buying it because it is wealth. Global trends indicate a significant shift. The LBMA, which is supposed to settle trades within 1 day, is now taking 8 weeks due to supply issues, an effective delivery default. China, India, and Russia are aggressively accumulating silver directly from miners, bypassing traditional markets and often paying double what the West offers. In the U.S., a recorded delivery of silver on the COMEX indicates that institutional players now prefer physical silver in hand over paper contracts. Despite this, many retail investors remain behind the curve, sometimes selling silver for liquidity just as the big players are buying. We're about to explore the video, but first, subscribe and hit the bell icon to stay up to date with our latest uploads. Your feedback in the comments is always appreciated.
Yeah, it's even a little higher. It's above 36 right now. It is 36.60 as we speak. It touched 37 the other day. It's the third time in history that it's been this high. There's been 7 attempts to break 35 since 2011. They've all failed. This is the first that hasn't. If it closes the month of June above 35, it's incredibly significant. I believe you'll get the hedge funds jumping in at that point. From a technical standpoint, huge. We've seen the weekly close above it, in fact, above 36. With all of the Fed announcements like the non-farm payroll and the interest rate announcement that's coming up in a couple of weeks, where they're probably thinking of keeping the rates where they are. These are all big things leading up to the end of the month. We want to see it close above 35 or 36, but ultimately asymmetrical in this respect means super low downside and amazingly high upside. There aren't many about Bitcoin when it was $100 a coin, very low downside, amazing upside looking back at it in retrospect. So, but I think that's where we are with silver right now.
The reason I like silver is I'm betting against the government.
Our monetary policy and the irresponsibility of our fiscal policy. That's exactly right. The dollar's down 9% this year. Silver is up over 40%. And so it's an environment where you're not buying gold and silver to become wealthy. You're buying it because it is wealth. If you own enough of it, yes, in those terms, you would be wealthy. Yeah. But I think this is something that's very, very important to understand. You're the one who I credit with. I've said this comment 1,000 times. You learn from Buckminster Fuller. You can't get out of the way of what you never see coming. And that's a very big problem here. People don't see the problem with the dollar that is coming. The de-dollarization trend is continuing, and that leads to a whole slew of other problems. At the same time, the Treasury demand is falling, which leads to higher interest rates, which leads to a slowing economy, which leads to all sorts of other problems. But when I look at silver, I see some very interesting things. I see the LBMA, London Bullion Metals Association, which is a T+1 settlement system, meaning T is a trade day plus 1 to settle. Your metal should be delivered to you or moving on the third day. The LBMA says, no, we're so backed up with delivery requests, it's 8 weeks. Really? T plus 8 weeks when I'm expecting my metal in 3 days. What if I own
they can't deliver? They cannot deliver for 8 weeks.
For 8 weeks. Imagine you own the Kiyosaki jewelry empire and you're making jewelry all around the world and you source gold and silver bars in London so that when you need to fabricate your metal at the call of a snap of a hat, in 3 days, your metal's moving to your refinery where you're making this stuff. Robert, I'm so sorry, man. We're at 8 weeks because the Bank of England says there's not enough in the way of trucks or manpower. Really? The Bank of England doesn't have enough trucks to move my gold and silver. That's a problem. That's a default. Or whether we're seeing in the United States where the largest single delivery of silver ever in the history of the COMEX happened in May. Or whether we're seeing China, which is the second largest producer of silver in the world, literally buying silver from all the miners directly in Peru, which disintermediates the marketplace. They're buying what's called doré and concentrate. Doré are the bars the miners make that are crudely refined, maybe 30 or 40%, before they send them to a refiner to be purified. And concentrate is a sludge, liquid sludge byproduct of that. They're buying all of that stuff in Peru, right from the miners, and then sending it back to China to be refined. They're paying double what the West will pay, but this accumulation is totally opaque. How much did they buy? What effect does it have on the price? On the supply, nobody knows. But this is coming from the second largest producer of silver in the world. Why are they doing this? Why has India bought over 900 million ounces in the last 5 years, more than the LBMA has in total? They've bought in the last 5 years, and now Russia, accumulating it for strategic purposes by the state, the first country to say that. Well, all of these things were happening when you and I were talking over the last year or two, but now someone within the Trump administration, thank goodness, is wise enough, I believe, to have said, listen, if we don't start doing what the rest of the world is doing, we're in trouble. And this huge rush of both gold and silver into the COMEX, which is standing for delivery, which is way different than anything we've ever seen, goes to tell you that the people at the highest level who know are favoring physical possession in their own hands rather than playing the game of paper-long contract, either in London or the United States. So just by that very fact that these people are accumulating this much, which is an anomaly. It's 5 feet of snow in Phoenix in July. This doesn't happen. It's happening. And that should tell everyone that all the things that you've been talking about for a very long time are now starting to manifest at the highest levels. And unfortunately, to your experience, we're still a rotation or two behind that level down here at the retail level. So a lot of these retail, especially local coin shops, they've gotten a lot of people that come in and say, look, I need to sell, maybe to put food on the table at record high credit card debt and lowest savings rates in forever.
Andy recalls the time during the pandemic in 2020 when silver premiums, especially for American Silver Eagles, skyrocketed due to overwhelming demand. Prices jumped from $2.79 over spot to $11 in just 6 months, a level that persisted through 2023. These premiums are set not by local dealers, but by major global distributors who purchase directly from mints, such as those in the US, Canada, and Australia. In 2024, however, as public interest shifted towards stocks, AI, and cryptocurrencies, such as Nvidia and Bitcoin, silver demand among retail investors dropped, causing premiums to fall to historically low levels. The silver market is facing an unprecedented supply-demand imbalance that central banks have largely overlooked. Global silver has experienced deficits for 4 consecutive years, with 2024's shortfall reaching 182 million ounces, the difference between 1.03 billion ounces of supply and 1.21 billion ounces of demand. Russia's unprecedented move to acquire silver for its state reserves is a critical signal in a market poised for explosive growth. Coupled with a severe structural supply deficit and burgeoning industrial demand, the window of opportunity to acquire physical silver at current prices before the implications of this supply crunch and potential broader central bank interest fully manifest is rapidly closing. Now, let's get back to the interview.
You call me back 6 months later, March, April, May 2020, the pandemic had hit. Andy, the pandemic really affected my business. I need to sell those mint boxes. You told me that you would pay me $2.79 over. Is that still good? I'd say, no, it's not, but how about $11 over? Because the demand was so high for the price of silver. And excuse me, for silver American Eagles, that in 6 months, the premium went from $2.79 over bid price to over $11 over the price of silver bid price, where it stood for most of the last, or 2020, 2021, 2022, 2023. And then things changed. They changed in a very substantive way. And that's going to get us to where we are now. So at least in terms of looking at where we were, then came the pandemic. The premiums went much higher. But let's discuss, before I get to where we are today, how those premiums are derived. There's about 5 or 6 massive primary distributors. These are the distributors that work directly with the mints and the refineries globally. These are the companies that some of them are publicly traded. They spend billions with a B of dollars buying and selling precious metals every year from the global mints: South Africa, United Kingdom, Australia, Canada, and the United States, and Austria. The 6 primary mints. And their job is to provide liquidity to the market, to be a market maker. So let's go back to the pandemic. These primary distributors who have agreements with, let's say, the United States Mint, they take everything the mint will give them because there's so much demand. The mint says, we're out of product. That's it, no more product. These primary distributors then become the market makers moving forward. They are the ones that set the premiums either to the upside or to the downside. There's so much demand in 2020 and 2021 that they say, we'll pay anyone that wants to send us their Silver Eagles $11 over the price of silver, but we're selling them at 12 or 13 or 14 over. Now that spread, which was much bigger than normal, was big because you can't hedge the spread or the premium. You can only hedge the metal content. So anyways, first and foremost, your guy in Arizona really is not the one who sets the premium. It's whoever he's going to sell it to, the big primary distributors. They're the ones who set the premium. What's interesting about right now, maybe the most interesting thing about the environment we find ourselves in right now, and why the premiums are so low, is that really starting in 2024, we had the rise of Nvidia, the accentuation of the Mag 7, the huge demand for cryptocurrencies, Bitcoin. You've talked about that for a long time. And so the American public did this 180 during the pandemic and the banking crisis, from risk off And we saw a lot of selling and non-participation in the metals market. So the premiums went down. Easy to send off, and sometimes you're in need of something a little bit more immediate. But yes, perhaps a local dealer would take that order, but thinks to him or herself, look, I'm going to have to offload this immediately. I'm going to have to box it up. I'm going to have to ship it to that dealer wherever they may be in order to get paid. I'm going to be out the money for several days because I just gave Robert a check, and now I have to quickly turn around and get this shipped off, and that's going to take time and effort and money. So I'm going to make something for that. That's pretty much the way that they would feel.
That makes sense.
Sending it back to me, well, that's just part of what we do. It's hedged, it's done, boom. I would be the person that coin dealer may call to offload the responsibility of that order on, because he or she would know. In fact, there are people that I work with that I will wire them the money, and this isn't the smartest business decision. But if that coin dealer was my friend and someone who I've trusted and worked with for a long time, he says, Andy, I got this guy in my lobby. He needs $500,000. Can you help me? Sure. I'll wire you right now. You just send me the metal immediately. Okay, fine. So I will front wire the guy the $500,000 so he doesn't go 3 days with no money in his checkbook, because I know that he'll send me that money. That's not the smartest business decision, but that's why relationships are so important in the industry on my side, and why I wouldn't be so angry. Now, without knowing the facts, I can tell you, you can look as an example, and this is not outing anyone. JM Bullion, who is one of the most well-known companies in America, one of the most well-respected. I have nothing but good things to say about them. I'm going to just look at something because they publish their buyback prices. And just to give you an idea of how low prices are right now, JM Bullion is owned by one of the largest distributors in the United States, in fact, in the world. And if we go to their website and hit sell to us and sell to us online, we can look at, for example, American Eagles, 1 ounce gold Eagles. They're bidding random years, $32.85. That's $50 behind the price of gold. I've never seen that in my career. Never. Now, I would be higher than that. And I'm not disparaging JM Bullion. In fact, I think they're a fine company. I want everyone to know that. But they publish their bid prices. They're $50 back to spot. My entire career, you would have gotten north of 2 or 3% over spot for those. And during the pandemic, as high as $200 over the price of gold based upon supply and demand. Now, I look at this as a contrarian indicator where the public is missing the boat on physical, moving into risk-on assets like NVIDIA, at the same time that the world's exchanges from London to the United States and even Shanghai are being bled dry by the most well-informed and sophisticated traders in the world. That will trickle its way down eventually. But this is why the big money, who understands things, who's in the information closest to it, is always ahead of the crowd. And if you can see, these players are 1, 2, 3, 4 steps ahead of the retail market down here. But that'll change very quickly. And I guess I'm going to be the lone voice of defense for this gentleman, not knowing that any of the facts. I'm simply saying premiums, I've never seen them this low, ever, especially by a reputable company like JM Bullion, who again, is at the tip of the spear.
Silver is approaching a critical turning point. With record COMEX deliveries, key nations such as China, India, and Russia stockpiling massive amounts of real silver, often bypassing traditional markets, and a chronic global supply shortage, the stage is set for a significant price increase. Meanwhile, retail interest remains low, resulting in a unique mismatch between educated institutional accumulation and uninformed prevalent attitude. As industrial demand rises and premiums recover, silver may soon transform from an underappreciated asset to a financial lifeline, particularly as monetary instability worsens. The current atmosphere may provide a once-in-a-generation chance for individuals who pay attention. Will other central banks follow Russia's lead and accumulate silver as a strategic reserve? Are retail investors passing up a generational change in silver by focusing on AI and cryptocurrency hype? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed.